So Bill, you're in the middle of a C share issue to raise more money for Ranger Direct. What's the market opportunity that you see for the business?
We see a great market opportunity. I mean, we launched our fund last May, deployed it. Luckily we're ahead of deployment schedule with it. We continue to see great opportunities in the segment that we're targeting, which is secured lending opportunities that offer a 12% return back to the fund, which will provide a 10% net return to the investor. The platforms we work with are growing and continue to see opportunities and are originating loans specifically targeted for our fund. So when we came back and met with the investors and told them we were ahead of deployment with our original funds, they recommended that we go to the market and do a C share. So we're here meeting with existing investors and new investors, talking about how our portfolio is doing.
You're operating in a disruptive space with banks being disintermediated with the direct lending. So tell us, how do you use technology to your advantage?
Yeah, we use technology in the loan origination side with our platforms. They go out and gather huge amounts of data from multiple sources. It could be bank statements, tax information, liens against businesses. They compile all that information and then provide it in a readable format so that our underwriters can quickly analyze if there's an opportunity there for a loan. So just the amount of big data that's there. And then on our consumer lending platform, we use a piece of technology called TrueSight, which has been around since 2010, very successful, one of the most successful technology pieces ever invented in the consumer technology. And it can quickly go through consumer loans on a one-by-one basis and actively select which loans it views are mispriced from the platforms to achieve the best alpha for the fund.
And just gives a bit more colour about the types of loans. You talked about secured being the main focus, but in terms of the geographic spread, the size, what are you looking? Where's the sweet spot for you?
Yeah, I mean, we love secured lending. I mean, we want it to be secured against something: real estate, equipment finance, invoice receivables, business assets, and what we've actually been a surprising thing or something we've been very happy with the portfolio is the amount of secondary collateral that we get. So a company may come to us and say, hey, we have invoice receivables, we'd like to do a loan against it, but what we also will secure maybe is the assets of the business, personal guarantees of the owner, any other collateral they may have. So a lot of secondary, because the industry is good, people don't think they're going to default, and so we're very asset greedy. So we try to be diversified across many different lending asset classes. We don't want to be heavy in any one. So like I said, we're in real estate, equipment finance, invoice receivables, business loans. Right now we're predominantly in the United States, but we just did our first international deal in Canada, and very soon we'll be announcing our first opportunities in the UK and Australia.
So just give us a very brief sense, where are we now on the curve of direct lending? It's been going now for, I guess, about 5 to 7 years, but we've still got a long way to go, haven't we?
Yeah, I think it's going to continue to grow. I mean, I just spoke at a big bank conference a couple weeks ago. Banks are actually increasing their lending, but they're going much more upstream. So larger loans, more primed, which is just creating more opportunities for lending. So I still think we're in a growth phase where you'll see new platforms launch, niche platforms, more money's coming into the space, everybody's looking for yields. But I think really when this asset becomes a mainstay asset class is when we go through a down credit market, because it's our feeling that especially our platform has secured lending opportunities next to it, that we may not be able to give the investors a 10% return if we went through a down credit market, but we feel very strongly we'll be able to preserve capital and return something in interest, and that'll be so different than the other asset classes, and I think that's when the asset class will really become mainstream.
Well, Bill, thanks for your time and congratulations on the C share issue.
Thank you very much.